All right, so this is called the honeydew pattern. I have a tendency to just ramble about this and use way too many words, so I'm going to try to keep it as simple as I can. You have a pivot high, or a swing high and a swing low, and using a 5-second chart, you can look for the congestion right towards the end of it. Right before that high happened, there was this congestion and the market reversed from there. When that happens, that's an area where you can sell. Same thing on the buy side. In this range bound market, we have a push to a new low. This should have been a failure for the sell area, and then once it re-enters that range, you can buy here or buy here. So that works really well until it doesn't. But when it doesn't, we can actually take a trade off of that too, because as we know, the most important thing, or maybe the only important thing in trading, is people who taking advantage of people who are out of their position and positioning yourself in a good place relative to them. So if we know that this is an area to sell and we see a second attempt here, once that breaks above that, we can enter there almost exactly. I mean, it's a pretty good entry. That was the bottom of that swing, and we got 50 some points off of that. You can see it again in this case. Congestion here, we get the reversal. The market does respond to that, comes down. The market does respond to that again, comes down here, and then once it shoots way up, that's an area to buy. That's an area to buy potentially. And then we have one more example of the failure of that even. Once that pivot fails, we have these secondary attempts to enter here. The market comes up to there, and then we can sell that for a scalp. So there's 3 ways to enter this. One, on the initial retest, these locations are very, very relevant. That's one kind of condition block you can mark out. The next one is when those break. Sometimes I call those YZ cons, yellow zone continuation patterns. They work on longer time frames too. Regardless, once this breaks, there's trapped people here, especially with those extra attempts to sell in that push down. You can buy it there, and then where do you take off? Well, that depends on other structures. Same thing happened here. It's basically a failed reversal. There's trapped traders here. It's really good when we have that big secondary attempt. You can enter there to where? Scalp, maybe. Depends again on the context. Like this one, you could have held it for continuation. It has a lot more to do with longer term time frame patterns and where you should take off and other things that are in play. For this only, the third thing is once this buy fails, you can sell there. So yeah, that's the honeydew pattern. 5-second chart. It works on longer time frames too, but these entries are extremely exact. So had you sold this honeydew here at 63 and had your stop just 10 points higher, which is a very reasonable stop for this entry, you could have caught a swing all the way to the bottom of the range for 90 points, a 9x risk reward ratio. Same thing here. Could have bought here, that stop's a little bit wider. Maybe you could have waited for a micro time frame reversal, or get this, just now seeing this, that's the honeydew level right there, and then buying at the honeydew level. So that's also a continuation entry for that off of the reversal. Once these trends have broken, you can enter immediately. So I guess there's maybe 4 ways to do it, which I'm just mentioning now. That might be the first one, the immediate entry on the failure if you have a longer term context. Then once it returns to it, so this is the immediate entry, trend failure, bounces off of this, comes above, buy it. The next one is when you return to those levels. So this is the example there, that's the example there. The next one, number 3, when it breaks above that, those function as support. And the number 4, same thing. So this is an example of number 3. Here's the congestion, attempt to sell. Actually, it's an example of number 1 and 2 and 3 and 4. That's actually a really good example. So anyways, once you trigger number 3, which is the break above, and it enters here, it comes down, you can sell there and take that for a scalp. Definitely worth looking into. You can design an entire system around this. Where do you take profits? How do you manage your position, et cetera, et cetera. Just wanted to explain this because I don't think people go down to this chart and really look at the microstructures and then integrate that into a larger system. If you put this into a contextual framework, like the 5-minute LVNs or 1 minute LVNs, or the failed second entry shorts, those sort of things, like the macro structures, or even the 15-minute fair value gaps or whatever, like, your contextual things. You start adding these intermediate setups into that, and your statistics go up pretty well. So anyways, have fun with this 5-second honeydew strategy. Good luck.